Yeah, it might be getting ready for a pre-OPEX deal. Is IV dropping really hard on the high volume? Kind of looks like it's starting to. There's some liquidity being realized already. We're about 5 days out. Today's showing a bit of a shift in trend. Still really risky because it's had other blowouts in the past that have led to like basically no price action. But those can be like other, like I don't know the history of the stock that well because those could be other like liquidity type events like ETF sell-offs or large shareholders moving out. Did you get 4K puts for SLD or FOMC? Right now I have 4Ks for 421 and for May 19th. I don't think either of those are for FOMC though. I think, isn't FOMC later in May? Could you please explain how you managed and hedged your NVDA position when it went against? Well, I bought calls into earnings. So as we approached NVIDIA earnings, I purchased calls. Here, I can break the whole thing down pretty easily. So right around here, going into earnings, and I should have just sold my puts at the time, but hindsight's always 2020. I purchased calls 25% of my total delta, of my total put delta. I held on to those calls through, I think it was right around here, through this time frame. During this period where it was finding resistance against what was its gamma, near its gamma max, I was selling calls out of the money. And down here, as it tested GN, I sold CSPs. Like, I think I was selling them about $10 out of the money on either side. When it moved up, I closed my calls. I assumed that this was going to be the top of the move when it started to break down. It wasn't. It bounced. I didn't have calls for this. I think I did on this, if that was a Friday. I bought, there was one Friday where I bought a bunch of 0 DTEs and they went up a bunch. But up here, I sold 1 week calls and 1 week puts. Here at the low, I sold more puts. When it tested gamma max, I sold a lot of calls. And these were 2 weeks out. And then, I sold puts last week here. And then this week, I don't really have anything open besides my put position. Which I also averaged up in this range. I don't remember all the times I averaged it, but I averaged it several times in that range. But here's the problem with doing that for a lot of people. For most people, I think, even for me, I probably would have been better off just cutting my put position here when I closed the call hedge. I should have just closed everything out and then rebought as the bullish momentum started to die down over the last week. Always hedge earnings. I mean, the real lessons to be taken from this are always hedge earnings. Because regardless of how bad they are, the reaction is binary, right? And these were not good earnings, and yet it still went up, right? I mean, obviously, when I was shorting NVIDIA back here, I had no clue that it was gonna, become the world's most popular stock over the next 3 weeks. So this is an unusual situation, to say the least. But, and then, if you hedge earnings and you make all your money back on your hedge, you can probably close out the other side of your position and reposition, right? But it is finally starting to fade. It's taken forever.